Hello traders, hello everyone. Welcome to 2023. I hope that you spent your time well during the holidays break, away from the screens, because I'm sure that this year will be quite interesting for the markets, because we are going to expect that volatility will remain because of central banks policy decisions, and there will be divergences between those which will impact the FX and other markets. So before we go to some of the analyses on US dollar index, then I will look at the dollar, yen, euro, Aussie, Kiwi, and DAX. I want to look at dollar index versus the S&P 500. Okay, so that's the ratio chart, which helps us to define which market is maybe going to outperform in the next few months, because here I'm looking at the weekly chart. So notice that here on the left I labeled the recovery from 2022 lows as a five-wave movement. But notice that this very strong drop and reversal below this trendline support suggests that even if the trend is bullish, we should eventually see a free wave pullback. So you are still in the middle of this decline, meaning that there is room for more weakness on this ratio chart. In other words, it suggests the dollar could see more weakness, while the S&P 500 could either slow down or maybe even gain higher. Now here I have another interpretation, the second wave count, and the reason why I'm having two wave counts, because both sometimes both can show us the same direction. So I think that this is actually advantage of that kind of analysis, because we have different outlooks, let's say for the next few years, but let's say that in the next few months, well, we can anticipate the same direction. So here I'm looking for a completed ABC movement, and even this one obviously has seen this broken trend line, and what we can expect after a completion of these three waves, well, that market will continue to the downside. It means that the S&P 500 could do much better than the US dollar then. So here then drop would be in five waves, but here only in three waves. But again, the short-term direction is the same, minimum three waves drop. So in other words, I think that US dollar could potentially see more weakness. And this is not coming only from this ratio chart, but also if you look here that's actually 4 hour from 2022 highs, we have a pretty aggressive sell-off. To me, this looks like an impulse. Okay, notice that we have this broken channel here, very decisive, strong move within wave 3 of 3. So that's a pretty nice an extension lower. I think that potentially we could be trying to build a support here. So watch out for this wave 4. Now sometimes this wave 4 could be sideways, okay, rather than deep, but in either case I think that after this pause we will see more weakness. So if suddenly we see recovery, let's say back towards 105.80 or maybe even 107.60, that's the potential area of resistance if we see this kind of a strength. Okay, but I think that this is just going to be a temporary recovery, and that more weakness could be seen here. Also, dollar yen should be very important as well whenever we're trying to define the next move of the US dollar. Let's keep in mind that dollar yen, of course, is linked to the US yields. We were seeing that US yields are coming to the downside because of projections that the Fed will slow down the hiking pace. Today we have this minute, so we'll see if there will be something new from the Fed, because they were quiet during the holidays. So traders will still look for the hints what the Fed may do, but we cannot ignore this very strong sell-off. It's pretty aggressive sell-off, clearly in impulsive fashion, meaning more weakness should follow after any recovery. Ideally, we are now trading at the support here around 130, very big level. So watch out for potential recovery. I'm not sure if really will occur from here or maybe even from around 1 to that's 127 area, but the idea is to look for and expect more weakness after next free wave rally. We just have to wait on this one to unfold. Okay, now let's take a look also on euro dollar. Now, euro dollar, in my opinion, is also in a corrective price action. Here I'm looking at the daily chart. Notice that again we have a pretty nice, very strong recovery, and I think that this is now just a consolidation for a wave 4. So again, watch out and be aware of more upside here for a fifth wave, maybe already this month. Okay. Also, the ECB obviously is looking for more hikes because the inflation is around 10%, so they want lower inflation, but the peak of inflation in the US is already visible. So that's why the Fed is going to probably to slow down with the hikes, and that's why the ECB, on the other hand, is still lagging. So this could keep the euro dollar in uptrend, which actually this kind of a divergence between those policy is actually the reason why the euro has recently turned to the upside. Okay, so after the current pullback, watch out for more upside. Now, first support has already been retested here around the upper trend line, around 105.30, while the deeper one, and maybe even more importantly, would be around 104.40. Okay, and then you have next one between 50 and 38.2%. Now, normally wave 4 will retrace to the 38.2% whenever we have an extended third wave like this one. Okay, now let's take a look also on AUD. Now, I also think that AUD or commodity currencies in general could do much better in 2023. Here we have some longer term chart. Notice that nice break out of a downward channel occurred here back in 2020. This was a very strong impulsive reaction and then a very nice deep pullback, but was able to find a support around the 61.8%. So I think that this wave C to the upside is still missing. And if you look here on a daily chart, notice that we broke this trend line, and more importantly, we traveled here above 6688 level. Why this is important? Well, because if I would be bearish, then this recovery I would look for potentially as a wave 4 should not make this overlap. But if this overlap happens, then it means that market is most likely forming a corrective price action, because impulses will not have overlaps, but corrections will do. Okay, so if you have this kind of a price action, then be aware that market sooner or later could complete this pullback and resume higher, which I think maybe is already happening here because of this broken trend line, and also the rise from the recent lows here of 2022 has been made by 5 subwaves. So here I'm looking at the 4-hour chart, expecting maybe a little bit lower prices to be retested. I really like these supports here around that's around 60.20, around there, around 65 59 level. Yeah, that's the 38.2% and 50%. So watch out for this potential retest before market resumes higher. So I'm a little bit careful right now. I really do not like to trust the early new year flows, because as you know, markets are trying to get back to normal. So a lot of new positions adjustments is happening from the big institutions, and obviously this can impact or move the markets in both directions at the start of the year. So I'm waiting for markets to slow down a bit today. As I said, we have the Fed minutes as well. So this is something that we want to see before we may decide whenever this AUD is really going to see a break higher, or maybe still making this wave C pullback, which is my primary scenario. Looking at Kiwi here, New Zealand dollar, firstly big time frame charts, very nice bounce away from this multi-year trendline support. More importantly, this rise clearly is impulsive. So I'm looking for more upside, but again, after a pullback, we haven't even retraced 38.2% yet. So if I think that this is the completion of the first impulse, before I may say that market is going to see more gains, well, I want to see this 38.2% retested. So I'm aware of potential lower prices here as well. We also had a plenty of fourth waves here in this previous recovery. So I think that this is a pretty nice attractive support around 0.6080 to 0.6160 area. Okay, that one here. So if we see a drop, I may look for potential longs here when we will be trading in this range. And finally, let's take a look on German DAX. Well, markets, European markets seems to be in much better shape, and then the US markets. Of course, it may have something to do with differential in interest rates. because obviously interest rates in the US are much higher, so money is much more expensive there, and that's why maybe there's much more money put into the flowing into the European markets rather than the US. So here, still, even if we are in an uptrend, I'm just aware of potential more and deeper prices. We have seen a pretty aggressive sell-off here in December. Now, so far, we are still recovering, but it can be a free wave movement right into this 61 and 78.6% FIB. So that's definitely the area where we should be aware that maybe the corrections will come to an end. Okay, because that's clearly the textbook FIBs that you should look for. So watch out for this price action here in the next few sessions. If we see a sell-off from here, I think that wave C is still will still show up this month. I think that ideal support again is at 38.2%. There's a 13,600 around there, the level that I would pay attention on for potential new bounce. But I think that stocks could do much better this year, but I'm just aware of potentially deeper prices here. Traders, thank you very much for your attention. I hope that you enjoyed this video, and again, talk to you next time.